Welcome back to the Jim Colbert Show, Real Radio 104.1, 407-916-1041. Text us at 77031. 5 o'clock keyword is credit, CREDIT. Slide over to realradio.fm and send that off for your chance at $1,000. Remember, if you're playing the game, you got to pick up your phone if you see a call from a number you do not recognize. That could be the money coming your way. All right, 407-916-1041. I am Jim. Jack is here.
Yep.
Ross is as well.
It's true.
It's 5:20 on Tuesday. That means one thing. It's time for It's Only Money with Scott Brown from Edgewater Family Wealth.
Helping people passionate about planning for their future rise above investment myths to build real wealth.
Isn't that really just common sense financial advice?
It's both.
Oh, okay.
It's Only Money with Scott Brown from Edgewater Family Wealth.
How about a big round of applause for a guy working on his vacation for us, Mr. Scott Brown?
Yeah!
Can't stop, won't stop.
He's a hero.
He's left-handed fist pumping. I love it.
I'm not really. I mean, I am kind of a hero. You're right.
Get out of here. What are you doing, boss? How's the snow? How's the powder?
Dude, it is insane right now. I'm not even going to lie to the people out there. It is like beautiful, sunny, the great snow. Everybody went home after the holiday weekend. My wife and I had the beautiful mountain almost to ourselves this morning.
Wow, incredible, man. You know, the funny thing is, I did read today, though, it is weird. Do you guys know that the lift ticket price for America is the highest in the world? Did you know that, Scott?
It doesn't surprise me considering what I paid for mine. So yes,
They compared it to all the Austrian and French skis or French ski slopes and all the European ski slopes, and we are by far the most expensive. I think the average up in Colorado in the nicer places is around $250 a day. That's on that. Yeah, that's. But
I'm sorry. Now I'm fascinated, Jimmy. Why were you reading about ski lift ticket prices?
What blogs are you on?
Yeah, it just pops up. I read.
He didn't want to tell you, but he's flying up tomorrow.
Yeah, there you go.
Oh, buddy, listen. I'd be there tonight. I'd hop on a plane now.
That'd be great. Yeah, next Tuesday you're both in the box.
We go to best of.
Yeah. You know what though? I think I'm going to guess at this, but I hear a lot of chatter up here from the locals. Is that there are two companies that own almost every ski resort in America. So there's a bit of a monopoly here in the United States that I suspect doesn't exist in other countries.
Interesting.
Which allows them to drive the cost up because you're competing against yourself.
Yeah, there's no competition. Charge what you want.
Well, Scott, let's get to it. You know, you specialize over there at Edgewater Family Wealth and have for over 30 years in managing portfolios of people who would like to make themselves a little more financially stable. That's accurate, right?
Mm-hmm. That is accurate.
And you always give us a buzz here on Tuesday around 5:20 to talk about a few things that people may need to pay attention to when it comes to managing their money or maybe finding somebody to do so. And it's funny because the first thing you wrote here is something that I've kind of used in my life across the board, you know, not to mention just money. It's never the thing you worry about that gets you. The last three or four major market hits were the results of that nobody saw coming, and they were and now major. You're trying to figure out why it's a major market hit. Explain that.
Well, I mean, it's like anything in life, right? It's the term, the study or the person this theory is named after it's the ludic fallacy. Basically, that if you spend like everybody, I don't know. I'm trying to think of what the common worry is right now. Let's say the common worry is the presidential election. That happens every 4 years. Every 4 years, people tell me, well, it's an election year and this, that, or the other is likely to happen. And the reality is if you've spent the entire year planning for something that might happen, it probably won't happen, right? It's like, you know, trying to prepare for a tsunami or an earthquake or whatever. I mean, it's not going to be a problem if you're prepared for it, right? So that kind of dismantles itself. And to that point, if you think about some of the major market stresses we've had over the last decade or two, you know, what comes to mind? 9/11, the housing crisis, COVID, Ukraine, and more recently, the Houthis, right? I never heard of a Houthi up until about 4 weeks ago. I didn't know. I thought it was a Star Wars character or something. I didn't know what that was.
Nobody knew until he started popping off missiles at tankers.
Right. So my point is that everybody sits around wringing their hands. This is going to happen. This election, this president, this politician, this policy, this tax thing, all these things, and they worry, and then COVID hits. Well, here's what I will promise you. in 2019, at the end of 2019, all the smart people who manage money in the world were sitting around rooms in December or November or October. Not one single smart PhD, Harvard graduated, Yale MBA, not one of them said, hey, what if we have a pandemic, right? Nobody said that. But it was the most influential event of that year, and I would argue over the last couple of years. So the thing that most influenced policy, tax policy, money policy, the Fed in people's portfolio is a thing nobody talked about.
And therefore, nobody could have honestly prepared for that particular moment. What you're talking about is an overall preparation, correct?
Again, this goes back to, and again, you could say the same thing about Ukraine. Like the year before, right before Russia invaded Ukraine, I would still hear people say, that's never going to happen.
Right?
They weren't worried about that. And now this thing with the Houthis and the Red Sea and all that stuff, nobody sat around a month or two ago going, what if they start shooting at our ships as they come through the shipping channels, right?
Yeah.
Nobody said that. So the point is, you can't plan for a lot of the things that occur directly. But what you can do is on a day in and day out, clients say to me, well, what are we going to do when something happens? Whatever that something is in their mind. I always say it's the monsters under their bed. All clients, all investors have monsters under the bed. They're just not sure, when it's going to come out. It's never the monster you think. And what I say to them is, in your day in and day out planning, you should build a portfolio that will survive, will remain prosperous over the long term, regardless of which monster comes out from under your bed.
Right. I mean, that's interesting, though, because, a lot of people, it is so funny how people like to focus certain things. Like I have a quirk in my life. Like if I was going to start something in my life, a life change, working out, maybe trying to lose weight or whatever, I won't do it on a Wednesday or a Sunday. I always start on Mondays. Because Monday's the first day of the week. It's the first day you do stuff like that. And it's dumb. It's the dumbest thing ever because
whatever works.
I'm glad he said that.
But it is. It's dumb. Because, I just saw a quote today. It said, the biggest mistake people do is I'm waiting for this, I'm planning for this type thing.
Mm-hmm.
And instead of just making a move, they're like, well, this year I'm going to do this and do this. And in reality, the move they want to make can be made immediately, but they just put these barriers in front of them for comfort and because they don't really feel comfortable doing that. And it was the whole thing about getting outside of that zone and sometimes feeling that way, feeling a little antsy about a decision you make. And as long as you've done the research, though, you can do well with that.
Yeah, I think you hit the nail on the head. It's about comfort, right? People do not, I say this all the time to my young people. There's no growth from comfort. Nobody comfortably becomes successful. Nobody comfortably gets in good shape. Nobody comfortably achieves tremendous success. It's just not the way it's done. And most people will overthink everything. They will try to wait for the perfect moment. They'll wait for I'm going to do this thing when the temperature's right and the mood is right and the moon is right and the people are right and the things are right. And that never happens. There is no perfect decision. There never has been. There never will be. And this is a morbid example, but I've used this in my books before, is think about the space shuttle. The space shuttle, I'm going to guess, I have no idea. Some NASA person will correct me, but I'll bet 1,000 engineers work on the space shuttle. And I'll bet they test and retest and test again to the point where everybody's numb. They've probably tested every screw on that rocket 1,000 times in this temperature, this weather, that pressure, whatever. And they've done it thousands and thousands and thousands of times. Thousands of really smart people have looked at it, yet we have had 2 of them explode.
Yes.
So if we said we're not going to the moon, or we're not going to explore space, or we're not going to put satellites in orbit until it's perfect, we would never do any of those things.
Right. I saw Elon Musk doing an interview the other day. I want to say this is a clip from his Rogan appearance. And Rogan asked him, what do you feel like when you see one of those rockets explode? And he says, I'm happy because that's the design. It's supposed to do that. That's how we learn to make them not explode, is the fact that they explode. He goes, I'll blow your mind. Some of them are designed to do that. So we can kind of see where the failures happen and we can get that data and then, of course, make better decisions next time and better designs and have better engineering.
I'm not buying the happy cop.
Well, maybe not.
Yeah, it might be.
Well,
he
when
was
you're worth
probably
$300 billion, when you're worth $300 billion, you can say stuff like that.
I guess.
Well, he was probably 4 bongs into that conversation. So
Scott, you mentioned this and that whole idea of what you're just saying. By the way, Scott Brown here with us, Edgewater Family Wealth, is the ludic fallacy, Ludic.
Yeah.
But the second part of this, you say, why breaking the code is not a thing. Once you break the code, the code changes. So how do you break that code? What is that secret of breaking that ludic code of going over preparation? And I still contend those are things you build because you don't really feel comfortable doing it, and you want to be able to rationalize not doing something.
Well, the ludic fallacy is based on the idea that you can figure something out, and once you figure something out, that something that you figured out will remain the same, right? And I was trying to think of an example to give you. So let's use golf as an example, right? Let's say you're in a league, and you're allowed to play on Saturday, and you can pick any tee time you want, and you've been playing this league for 4 weeks, and you realize that all the guys that are teeing off at 8 are scoring higher than the guys that are teeing off later in the afternoon. Maybe it's the wind, maybe it's the rain, I don't know. But you say to yourself, I'm teeing off at 8 from now on. And so you start teeing off at 8. But what you realize after about 5 or 6 weeks is your score is not any higher than anybody else's. And the reason is because everybody else is teeing off at 8 because they've figured out the same thing, right? and the ludic fallacy is that once you figure something out, the something will change. That's true in stocks as well. Let's say you trade the stock market, you buy the S&P every Thursday because you realize that every Friday morning before earnings come out, the stock market goes up.
Right.
But then about 6 weeks into your brilliant program, you realize that stocks are no longer going up but going down on Friday because everybody and their mother has figured out what you figured out, and they started buying stocks on Thursday afternoon. That is the ludic fallacy, and it always amuses me when somebody will say to me, hey, man, I got it figured out. I see the pattern. I know how it works. I know exactly when this stock's going to go up and exactly when this stock's going to go down. And 6 months later, that idiot's still going to work every day, still trying to figure out what he did wrong. So, again, that's the ludic fallacy.
Is that kind of one of the biggest hurdles you see from people making a decision to start an investment, start a portfolio with a small investment, $1,000, $500, whatever the case may be? Is that one of the biggest things that stops them from doing that?
Yeah, I think it's, again, a lot of people are intimidated. They don't think, how do you eat an elephant? One bite at a time. But most people don't want to eat an elephant one bite at a time. They want to eat it in 2 bites, right, and be done with it. That's not going to happen. So again, most people are trying to get somewhere quickly. And if they don't see or don't believe there's a way to do it quickly, it's human nature. It's human nature. We don't like to wait.
Right.
We want it now. We want it yesterday. And the shortcuts never work. People, again, they're just waiting for the perfect opportunity. Most people, I hate to say this, but most people spend a lifetime looking for a shortcut they never find.
Right. That's what happens with people like that because they're always looking for that shortcut. If they'd just spend that time just kind of grinding it out on that path that they know works, it would be so much better. But it's hard to explain that to sometimes because I think social media empowers a lot of that, Scott. I think one of the really disservices to our youth is you go on Instagram, you go on Twitter, Facebook, Snap, whatever the case may be, and all you see is 18-year-old, 20-year-old kids are driving like Bentleys, and
all you got to do is
wearing AP watches and stuff, and everybody's like, "Wow, man! If I'm 19 and I don't have that, I must be a loser."
All you got to do is just invest all your money into Fudge Coin.
Yeah, right.
And then do what I did and just buy thousands of Lambos.
That's right, Sheena Ubu, buddy. I'm there.
Yeah,
I'm there. It's great.
Yeah, It's not a healthy situation for people who are impressionable, for sure.
Let me ask you a quick question. How often in your practice, how often there in your business, do you have to talk people off the ledge? Like people you've known that are smart people who hear a piece of information on social, hear a little bit of information from a buddy who's got an inside guy who works at Merrill or something like that, and they think it's going to be the move. They're calling you to try to get some verification that that's the move. How often does that happen for you?
Less frequently now. Earlier in my career, it happened quite a bit, but I've gotten to grumpy old man stage where they know what I'm going to say. And usually they'll call one of my junior people because they have to listen to them. if if one of my older clients, long tenured clients, and I have many who've been with me 20, 30, 35 years, they won't call me because they know what I'm going to say. I won't feed the beast. I'm like,
and they want to do it so bad and be right in your face, don't they?
oh, they want to be so. And it's the funny thing is, it's something different every time. It's, they're sure this thing, this conspiracy, this video that they watch, this documentary, this YouTube. Scott, you gotta check this thing out, man. This is no joke, Scott. This is really going to happen.
Yeah.
I'm like, okay, I'll check it out. And then 8 months later, they call me with a different, completely forgetting the one they gave me before. That didn't pan out in any way, shape, or form.
Right. The funny thing is like I guess the Bitcoin thing is, and is it ETFs are making another push right now because I guess there was a meme that went out or some kind of thing last week that's saying that they, something the Fed was going to do something with ETFs or verify them or whatever, and people were freaking out. Now Bitcoin climbing a little bit still. Do you see still no value in Bitcoin after it took its initial bomb and all that stuff? I mean, do you still look at that as like a play toy, as something that should not be taken seriously?
This is a tough one because I don't know what Bitcoin is, and I don't think anybody does. If you want to know the truth, I think it's a store of value. I liken it to a piece of art, or 68 Chevelle is always the example I give. Sometimes it's worth this, sometimes it's worth that. But Bitcoin doesn't do anything. Right. It doesn't produce a dividend. It's not a company producing a good. It's not a company that owns restaurants. There's no production. There's no there. That doesn't mean it's not real. That doesn't mean it might not have purpose. We really don't know what it is. And I will tell you, and this is a Scott Brown opinion, so feel free to make fun of me all you want, but I also think it's ludicrous to think that the United States government is going to allow a competing currency. You cannot control an economy, a currency. The Fed would have no power, and I know some people think that's a good idea. I don't want to debate that. But you can't do those things if you don't control the currency. You can't penalize a country like Russia, right, like we're doing right now, if you don't control the currency. Right. So to me, Bitcoin's on borrowed time, if you ask me. Maybe it'll turn out to be something I can't even fathom. And to be honest, that could happen. Yeah. But right now, I still think it's a game of musical chairs with no value.
Yeah. Just waiting for the bottom to fall out of it, and hopefully you're not holding the chair or not standing above it, because that's what happened before. I did find it interesting though when I saw that kind of as it peaks back up. You'll always get more interest and it gets more media coverage when it starts kind of doing a little something. So I just saw that in the news and wanted to get your opinion on it. Well, Scott, look, man, I want you to go out there and have some big powder fun tomorrow. Enjoy yourself. Yeah. Now, we talked about skiing yesterday, and we found out that it is almost impossible to die skiing. It's a 1 in a million chance, but...
Mm-hmm. You're not. What are you bringing that up for?
Hold on.
Oh, Jesus.
The number one.
Sorry, Scott.
What I'm saying is have a good time because you're perfectly safe.
That's how you jinx it.
Yes. I appreciate. No, I'm too slow to kill myself, so it's fine.
There you go.
All right, buddy. Well, have a great time. We'll see you next week. Good and loud for Scott Brown from Edgewater Family Wealth. Scott, if people want to kind of get with you and find out if they are in the right places with their money, or maybe hire you as a portfolio manager, what's the best way to contact you guys and get started?
You can always find us at edgewaterfamilywealth.com, and you can download our free How to Hire an Advisor guide called I Got a Guy. Drop us an email or whatever, and we'll get it to you.
Very nice, buddy. Have a great time. Be safe, and we'll see you next week. There you go. All right, man. Scott
Thank you.